A quiet but urgent change has come into effect for many pensioners' banking arrangements, and even if you haven't heard about it yet, it could affect how your state pension or other DWP payments land in your account. Stay with me, these 6 new rules might change where, when, or how your funds arrive, and in many cases there's nothing for you to do, just to be aware. So here's the story. The Department for Work and Pensions has introduced 6 new banking rules impacting how payments like the state pension, pension credit, or any DWP benefits are processed and delivered to pensioners. These changes are part of a wider push to modernize payment systems, reduce fraud risk, and improve consistency, yet for many of us over 50, retired or nearing retirement, they may bring confusion or small headaches if we don't understand them. I've spent time digging through the official guidance and talking to advisors, and I want to walk you through each change, who it applies to, and how to ensure your money continues to flow smoothly. First, one of the key changes is that DWP will now more strictly validate the bank account details of pensioners before making payments. In the past, once you gave your sort code and account number, payments generally continued unless something went wrong. Under the new rule, your bank details might be rechecked or even rejected if they don't fully match the records the DWP or your bank holds. That means an older or rarely used account could suddenly become invalid for your pension payment. If your bank hasn't kept up to date with your name or address changes, or if you've moved or changed banks without informing DWP, your payment could bounce or be delayed. Here's a simple example. Mrs. Ahmed, who lives in Manchester, had her state pension paid into a long-standing account in her maiden name. She later remarried and changed her surname but didn't update her bank with the new name fully. Under the new stricter checks, the bank data didn't match and her payment was flagged. This required her to confirm identity again and supply updated proof, which took several weeks and temporarily disrupted her payment. For many pensioners, such a delay, perhaps of a week or two, is a heavy burden, especially if pension income is essential for covering rent, utilities, or prescriptions.
Second, DWP is tightening rules about payment destinations. They now prefer or require that state pension and other benefit payments go into UK-based, regulated bank, building society, or credit union accounts, and in some cases directly into personal accounts rather than third-party ones. In the past, some pensioners asked to have their pension paid into accounts held by children, caregivers, or overseas accounts, for example when living abroad part of the year. Under the new regulation, those arrangements may no longer be permitted or may face higher scrutiny. If your pension is currently set to arrive in an account under someone else's name or in an overseas account, you may need to shift it into your own UK account or a UK-based bank to stay eligible. Third, there's a limit being introduced or reinforced on how often you can change your nominated payment account. Previously, you might have switched banks every few months or moved payments from one account to another as a convenience or to chase better interest. Now, DWP may impose minimum periods, such as once per year or after a certain number of months, between requests to change the destination account. The aim is to reduce fraud, but for those who like flexibility, this feels restrictive. Imagine wanting to move from a current account to a high-interest savings account 1 month after retiring. You might have to wait several months under the new rule. Fourth, greater emphasis is being placed on proof of account ownership. Even if your bank details are accepted initially, DWP might request additional evidence, such as a recent bank statement in your name, a letter from the bank confirming you hold that account, or other documentation. In some instances, they might contact your bank to confirm. For some pensioners, especially those who use talk-in branches, rarely or rely on a caregiver, gathering the required proof may feel burdensome. But the intention is to be sure funds go into an account only you control or consent to. So if you haven't received a request, that's good. But if one arrives, respond promptly with clear documents to avoid delays. Fifth, there's a change concerning merged or default accounts. If a pensioner does not, by a certain deadline, confirm or update their bank details, DWP may deposit their payments into a default holding account or a central account temporarily rather than abandoning the payment. That means your pension might end up in a temporary account pending verification. It doesn't mean the money is lost, but you may need to claim it or request its transfer to your main account. It's a safety net, but it also introduces extra admin. For instance, Mr. Jones in Liverpool missed a letter prompting him to confirm his account details. His pension was then placed into a DWP-designated holding account. He had to contact DWP, confirm his preferred account, show proof, and request the money be forwarded. That added stress and delay. And sixth, the new rules reinforce that changes must often be made in advance of any move or change in bank accounts. In other words, DWP expects advance notice and documentation when you anticipate changing your account. If you've planned to switch banks or accounts, it's no longer safe to wait until the last minute. Changing after a payment date might result in your payment being sent to the old account or being delayed. So, planning matters. If you intend to move your banking arrangements, start the paperwork early, inform both your bank and DWP, and be ready to verify everything. Who is affected? Essentially, anyone over 50 receiving state pension, pension credit, attendance allowance, or other DWP benefits, even if they haven't yet claimed. If you receive any regular DWP payment, these rules may come into play. If your pension money has always arrived without fuss, you may never notice. But for those with older accounts, multiple moves, joint or third-party arrangements, or who live abroad part of the year, changes are more likely to matter. Why does it matter? Because many pensioners live on fixed incomes. A few days or weeks delay can mean missing utility payments, rent, or mortgaging essentials. Confusion or temporary loss of income is something none of us wants to face late in life. Also, the new rules aim to reduce fraud and misdirected payments. But when safeguards tighten, there's a risk that genuine pensioners may face obstacles if they aren't ready. It's wise to be proactive. Let's clarify a few terms you may have come across. The triple lock refers to the guarantee that the state pension rises each year by whichever is highest of inflation, average wage growth, or 2.5%. It's not directly a banking rule, but if your pension is upwardly adjusted, errors in your account details could mean you miss receiving the full adjusted amount. Means tested means that some benefits, like pension credit, depend on your income and savings. If your bank account is changed or frozen, DWP needs to assess that correctly. Pension credit is extra financial support for those whose income is low, on top of their state pension. Any delay or hold in bank payment can reduce their cash flow and create worries. So when the DWP enforces a banking rule, it can indirectly affect entitlements, assessments, or eligibility. Some pensioners have told me in forums or local groups that they'd been caught out by minor mismatches, an old address, a misspelled middle name, or a joint account notation JNT rather than IND for individual. These small details can trip the more rigid new validation checks. One woman in Scotland reported that her benefits were placed into a holding account because her husband had been removed from a joint account, and she hadn't updated the DWP records in time. She then spent days on the phone trying to get the money released. That kind of stress shouldn't happen, but under new rules it does if the documentation doesn't match carefully.
On a more positive note, there are safeguards built in. The DWP is required to notify you before suspending or redirecting payments, to give you a chance to correct or confirm details. If your payment is placed in a holding account, you're not losing money, you're being asked to confirm verification. In many cases, once you supply the requested documents, the payment should be released. And the tightening is meant to protect you from fraud, identity theft, or mistaken payments to ghost or closed accounts. For many people who've had to chase lost pension payments, these steps may bring more peace of mind once they're settled.
So what should you do right now? First, check your bank details currently registered with the DWP. Ensure your name, address, and account number match exactly how your bank sees them. That means checking for hyphens, middle names, or prefixes. Those little discrepancies can make a difference. If you've changed your name, moved home, or opened a new account in recent years, confirm DWP knows. Next, avoid using someone else's bank account for your payments. If you currently have your pension going into a daughter or son's account for convenience, begin planning to switch to an account in your own name at a UK bank. Third, if you're considering changing your bank or account, don't wait until the payment date. Start the paperwork early. Contact DWP and your bank, provide proofs like bank statements or letters, and be ready to confirm ownership. Fourth, If ever you receive a letter or request from DWP asking for documents or confirmation, don't ignore it. Respond promptly, follow the instructions carefully, and keep copies of everything. That way, even if your payment is temporarily redirected or held, you'll have the evidence needed to recover it. Finally, keep an eye on your bank statements around pension payment dates. If a payment doesn't arrive when expected, act fast. Contact DWP and your bank together and check whether perhaps your funds are waiting in a holding account. I understand many pensioners feel anxious about such bureaucratic changes, especially when what we care most about is receiving our money reliably and without fuss. But by staying proactive, double-checking your details, and responding to any communication promptly, you can minimize the risk of interruption. And when changes do affect you, sharing your experience, perhaps here in the comments or with local groups, can help others stay alert and prepared. Let me know if you've already had a letter from DWP or if any change in your payments has surprised you. Your story might help someone else avoid trouble. Remember that these changes are part of a broader trend. Financial services, fraud prevention systems, and government departments are increasingly linked, more automated, and more tightly validated. For those of us relying on a fixed and limited income, small mismatches or paperwork delays should not become hurdles. If you'd rather have someone help you, perhaps a trusted friend, family member, or a citizen's advice bureau, it's okay to ask. Many local organizations already help pensioners check their benefit details or banking status.
As we close, let me stress that the fundamental promise remains: your state pension and other benefits are rightfully yours. These new banking rules are administrative guards, not barriers. But they can feel uncomfortable if we're not prepared. So take a moment today to check your details, ensure DWP and your bank are aligned, and be ready to respond if they ask for proof. Stay alert, stay patient, and don't hesitate to seek help if needed. In time, these changes may improve security and consistency for everyone. Thank you for watching and being part of this community. If you spot any notices or receive letters from DWP, please stay calm and act sooner rather than later. I'll continue to keep you posted on any updates affecting pensions, benefits, or banking rules. Take care, keep your details safe and up to date, and may your payments always arrive when they should.